Good day. On this video, I'm going to look at notes to the financial statements. So there are two that I'm mainly going to deal with. The first one, I'm going to deal with your ordinary share capital. Ordinary share capital, which is your note 7. And then I'm also going to deal with the retained income, which is note number 8. So in order to explain ordinary share capital better, which is what I'm going to start with, I'm going to make use of a past exam paper, and in this case I'm going to use the prelim exam of Northwest for the year 2017. So you are given information here on your share capital under information C, and they say the authorized share capital comprises of 5,000 ordinary shares. Now you need to remember that when you're talking of share capital, there is what is called authorized shares. Authorized. So when you talk of authorized, this is the maximum number of shares that the company is allowed to issue based on its memorandum of incorporation. So this is the maximum number of shares that the company can sell or the company can issue. And then there is what is called issued share capital. These are shares that have been sold. So take note of the difference between the two. If the share capital is authorized, that is the maximum number of shares that they are allowed to sell according to their memorandum of incorporation, and then the issued share capital is what is actually been sold. So when you look at this information here, they are saying the authorized share capital comprised of 5 million ordinary shares. 880,000 ordinary shares were issued before the 1st of September 2016. Now, if you look at our information here, you can actually tell that our financial year ends on the 31st of August 2017. Now, automatically, we know that this financial year started on the 1st of March. On the 1st of September 2016. So your financial year in this case will be 1st of September 2016 to 31st of August 2017. This is the accounting period that we are dealing with. It's 1st of September 2016 to the 31st of August 2017. Okay, now, so what do they say? They say the ordinary, the 2,880,000 ordinary shares were issued on the before the 1st of September, which means at the beginning of the year, the share capital was 2,880,000 shares. Now, so with your answer book here, what we can do is we can write there, let me get another pen. We can write 2,880,000 ordinary shares at the beginning of the year. This is what we have. So we've got 2,880,000 shares at the beginning of the year, and if you want to know the value of those shares, you can actually look at your information provided. So on the information provided, you can tell that you've got your ordinary share capital here, and they say the value is 1440, right? So you come to your answer book here, it's 1440,000. So this means that at the beginning of the year, we had issued shares of 2,880,000, and they had a value of 1440. Okay, so that part is fairly easy and straightforward. Now, then the second part, the bullet number 2, it says on 30 June, which is now during the year, on 30 June 2017, the directors decided to repurchase 144,000 ordinary shares for 110,000 per share, 410 cents, per share, right? So they bought back 144. So on your answer book here, you can actually write your 144,000 shares and put it in brackets, because shares bought back or shares repurchased, they reduce the number of ordinary shares. So this is repurchased at average price. Okay, so this becomes a very critical component which I need to explain now. So you're going to see that whenever you are given buyback, I always say that people must develop a fork for your buyback. So on the tip end of the fork, you must have your buyback price. So in this case, we are told that our buyback price was 110 cents, which means it's R1.10. Now, what must happen is that, remember, these shares that are being bought back, they were issued at different times at different prices. So when you have a buyback, you need to adjust your ordinary share capital using the average price, because you don't really know at what original price these shares were sold. So here you're going to have your average price. And your average price is obtained by saying value of shares over number of shares. Okay, now whatever you get here is what is used when you are adjusting your ordinary share capital. That's your ordinary share capital, right? And then the other part here, you're going to use the amount above average. Now, the amount above average is the difference between, it's actually buyback price minus average price, right? What you get here will then be used when you're preparing your retained income. Okay, so what you do now is you are told that these shares were bought back at 110 cents, which is R1.10, but they were 144. So the first thing that you need to do in this case is to actually calculate your average price. Now, in calculating your average price, I've already said here the formula is value of shares over number of shares. So the value of our shares is 1,440,000 divided by number of shares, which is 2,880,000. Okay, so if you to use a calculator on that, you see that it gives you 2,880, it gives you 50 cents. So it means it's 0.5, which is 50 cents, right? So what it then means is that, so when I'm reducing my ordinary share capital, I'm going to use 0.5. But for me to get the amount above average here, I need to say my buyback price, which is 1.1, minus my average price, which is 0.5. And if you put that on your calculator, it's going to give you it will give you 0.6. So this is 0.6, which means when I'm dealing with ordinary share capital, I'm going to say 0.5, which is the average price, times the 144, which is the number of shares that were bought back. So meaning to say, when I'm reducing my my ordinary share capital, I'm going to reduce it using 72,000. So this is going to be 72,000. Now, when I'm doing my retained income, I'm going to say 0.6 times 144,000. 0.6 times 144,000, and this will give me 86,400. So when I'm doing note number 7, which is retained income, under my buyback, I'm going to reduce it using 72,000. When I'm doing retained income, I'm going to reduce it using 86,400. So if I'm to go back to my answer book here, it will be at average price of 0.5, which gives me 72,000. And that 72,000 must be in brackets, because buyback reduces the number of shares as well as the value of those shares. Okay, now then bullet number 3, it says on the 1st of August, that is still before the end of the year, the company issued another set of shares. So they issued additional shares of 934,400, new shares for 125, right? So it's 934,400. So you're going to say 934,400 issued at 1.25. So you also take your calculator there and you're going to say 1.25 times 934,400, and that will give you 168,000. These are additional shares. So at the end of the year, you need to check and verify how many shares do we now have. So at the beginning with 2,880,000, we reduced them with 144, and then we added 934,400, and that gives us 3,670,400, right? And then you do the same on your value. It's 1,440,000 minus 72,000 plus 1,168,000, and this will give you 2,536,000, right? That's what it's going to give you. But if you also check here on our information, I've managed to prove that the closing balance of our ordinary share capital will be 2,536,000, but this had already been provided to us, because if you check at the beginning of the year, it was 1,440. At the end of the year is 2,536. But I managed to prove it using the note itself. So what is very critical is for you to understand how to do this buyback, because that will be the cash that you have there. You must be able to know how to calculate your average price, so that you're able to know the value with which you must reduce your ordinary share capital. So this is your note number 7. I'm going to do note number 8 using the same question paper. Thank you.